We have some breaking Fed news. Steve Liesman joins us now with that. Hey, Steve.
Tom Barkin, speaking in Raleigh, says a soft landing is increasingly conceivable. He sees the case for it, but he cautions that it's not inevitable. He says there's a potential for rate hikes. It remains on the table. Says that was talked about at the meeting and by Fed Chair Jay Powell at the press conference. Any rate cuts, he says, depends on whether or not inflation eases. There's a range of Fed forecasts, he notes, and it is wide from no cuts predicted to 6 cuts among Fed officials. But he does say they're making real progress on inflation. Talks about some risks to the soft landing. They include the lagged effects of policy that could make the economy weaker, along with unforeseen shocks, but also to the other side, inflation remaining higher than 2%. He notes that businesses are not going to stop raising prices until they're forced to, and that comes from one of two places, either weaker demand or more Fed rate hikes could be needed in order to bring down inflation. The recent decline in yields, he points, goes the wrong way along the rise in the stock market, saying it could stimulate demand. Any downturn, he says, though, was not likely to be severe because you have latent demand could keep the consumer spending, along with businesses preparing for a downturn. He's speaking just hours before the release of the minutes of the Fed's December meeting, where Fed Chair Jay Powell did say that officials had spoken about rate cuts, but investors, they're going to scrutinize these minutes for the extent to which cuts were discussed and for any clues about when that first rate cut might come. Over at TD Macro, they said, we expect this week's minutes to show that the FOMC is not entertaining the case for rate cuts just yet, so they're preparing for, call them, more hawkish minutes. The market, though, trading with a 73% probability of a March rate cut, and they priced in a quarter-point hike at most meetings after that. You can see what we look at. The January 25 contract for the full year of 24 shows 6 full rate cuts baked in with the current yield of 3.84. Like Barkin, most Fed officials since the meeting have leaned against the market's aggressive pricing for cuts, but they've only had a limited impact on the market's pricing, leaving it up to the data to bring the market in line with the Fed, or maybe, Mike, the Fed in line with the market.
Yeah, and I guess, Steve, there's time for that to develop at this point. Barkin, like most Fed officials, probably just doesn't want the market to get too comfortable and certain about any single scenario when the Fed itself is sitting there entertaining a relatively wide set of options.
I think that's a really good point, Mike. I think if we were sitting here and I was given this report in early March and the Fed was still talking the way they've been talking and the market was still priced the way it's priced now, I think we'd have a problem where there would be disappointment and a lack of the market and the Fed being in line. And then, of course, seeing the data in dramatically different ways. But there's still a bunch of inflation reports to come. There's still a bunch of GDP reports to come. We have a very important jobs report on Friday that should show the job market continuing to ease back from its high ranges of earlier last year. And so when all of that data come in, if the market and the Fed are on different pages, we have a problem. I do not expect that to be the case.
Yeah, we even have, a Fed meeting between now and then. In January, 4 weeks from today, I guess, would be the decision. So we're going to have plenty to work with, Steve.
So basically, the FOMC minutes don't matter today because it's not going to say anything different than what the Fed officials
They give you a window
said.
on the starting point, I guess.
Becky, I disagree. I disagree a little bit, only because I think the market's gone very far based upon some comments that were made by Fed Chair Powell, and they extrapolated off of that. And I'm really interested to see how the market reacts to what is ostensibly a more thorough account of that meeting with all the different sides.
I was thinking the same thing half an hour ago, but then I thought about it, and we've already heard from Williams, we've already heard from Goolsbee trying to talk this down, and the markets didn't listen to their actual saying those things. If you read too much into an FOMC minutes after ignoring what they were telling you, it's possible.
I don't disagree with you. It may be that the market ignores it today. As a guy who watches the Fed closely, I want to see what they talked about.